Welcome to this educational video about securities. Securities are tradable financial assets, commonly known as bonds, shares, and derivatives. They represent an investment and can be traded in financial markets. Securities are critical for raising capital in the economy, allowing governments and companies to access funds needed for growth. There are three main types of securities, including debt, equity, and derivatives. Debt securities, like bonds and certificates of deposit, are loans made by an investor to a borrower. Equity securities represent ownership in a company, such as stocks. Derivatives are complex instruments whose value is based on the performance of underlying assets. Debt securities are essentially IOUs, issued by corporations or governments, promising to repay borrowed money with interest by a specific date. They are a way to secure funding, without giving away ownership, commonly seen in instruments like corporate bonds and government treasuries. Equity securities are stocks that represent a share in a company's ownership. Shareholders can earn profits through dividends and capital gains when the company's stock price increases. Unlike debt securities, equities do not guarantee a return and carry the risk of losing value. Derivatives are contracts that derive their value from other assets like stocks, bonds, currencies, or market indexes. They can be traded on exchanges or over the counter, and are used for hedging risks or speculating on future price movements. Common examples include options, futures, and swaps. Regulatory bodies, such as the United States Securities and Exchange Commission and the United Kingdom's Financial Conduct Authority, oversee the trading of securities to ensure transparency and protect investors. Securities are traded on capital markets around the world, including major exchanges like Nasdaq, the New York Stock Exchange, and the London Stock Exchange.